Hey guys, Adam Rose, Vice President, Senior Loan Officer of Western Ohio Mortgage here in Sydney, Ohio. Today is another episode of the Mortgage Guide Podcast, the holiday edition, but nothing too fancy. It's really just kind of educating a little bit on what's going to be coming up in the new year, as well as some pitfalls that you might be able to make, or probably already made during the holidays, but hopefully not if you're trying to buy a house. So let's dive in, shall we? So wanted to talk due to the season, right? And I hope everybody has a fantastic Christmas and a new year. I hope everybody gets what they wanted. I hope everybody gives and has a blast doing it, and everybody gets together, has a good old time with the family and some friends. But let's talk credit cards. So credit cards can be the silent mortgage killer, you could say. They're a necessary evil, right? I mean, but the excessive usage of said credit cards, not just missing a payment, could dramatically impact your ability to purchase a house or get a mortgage, should I say. So let's talk about that a little bit. You know, the credit card season's here because it's shopping season, it's Christmas time, and people are constantly opening up new accounts, new store cards, charging up their current limit. It gets a little ugly, right? It's a very challenging time of year for so many people because you just want to give so much. You want everybody to have a good time, but at what cost, right? Putting a damper on your financial future may not be worth it, right? So maybe we should focus more on just being around with family. I'm guilty of the same thing. But let's talk about the credit card usage. First off, don't take on anything new if you can help it. And then this video might be a little too late, but if you're at Kohl's and you're spending $300 and they can say you can save 20%, but you're in the process of trying to buy a house, please don't take out that new credit card. All right, that's just first-time home buyer 101, okay? Just don't do it. But talking about maxing out the credit cards, the reason this is so important is, let's just say, even if you're not in process of buying a home, but you're looking at possibly buying a home in the new year, you know, if you dramatically increase the balances in your credit card, or you finance, basically, the cost of Christmas, and in January, February, you want to go ahead and do that credit check, but you haven't really paid down your balances, that can negatively impact your scores, right? Because of credit utilization ratios. We've talked about this before, right? Not just late payments that cause problems. And when I say late, I'm not talking about 5 days past their due dates. I'm talking day 31 when they actually report you to the credit bureau. All right, never do that. But the balance that you have versus your credit limit is going to impact your credit scores, even if you've never had a late payment. But you have your credit card maxed out, you go over the limit, something like that, you're going to get dinged up pretty good. And the ranges can be pretty severe, depending on how much credit history you have, how strong it was to begin with. You might see a 10-point hit, you might see an 80-point hit if you're a thin credit borrower. So you've got to be very, very careful. Remember, the sweet spot is trying to keep your credit card balance around 25% of the limit, right? So you got a $900 limit, keeping it below, $250, something like that. That's perfect. That's fantastic. That's kind of where you want it to keep or want it to stay in order to be in good shape. Also, during this time of year, if you're shopping online, try to stay away from Klarna, Affirm, PayPal Extends, all those afterpays that you see at checkout that says, hey, do you want to extend this payment over 6 payments or 6 weeks or whatever it might be, 6 months? Stay away from those, okay? That's going to be an undisclosed debt. That's going to be something we find in your bank statements. Then we have to document the account, add it to your debt ratio, and it could kick you out on your debt ratio. So don't do it, okay? So that's just my warning. Again, hope you all have a great holiday season. Just be careful with the credit card usage and try not to take out a new credit card account because that could have a negative impact on you in the short term at least, okay? But we are also approaching 2026, the new year. A lot of people have all kinds of stuff they want to do in the new year and reset their mindset, new goals, whatever it might be. And one of those for some people may be purchasing a home or finding a home because you've been shopping for 6 months. You just can't find anything. That happens too. But tax season's coming. So you don't want to accidentally hurt yourself. And what I mean is we don't want to blow the tax refund, right? So not everybody gets a refund. I feel so sorry for you guys that have to pay in. I get it. But people that do get a tax return, let's utilize it correctly, right? Let's save it. Don't let it be earmarked for a purchase of some sort of materialistic thing if buying a house is within the realm of things that you want to accomplish next year. All right, so let's just do an example. let's say you get $5,000 back, which is a hell of a good tax return. Instead of just going and spending on something that you really don't need, or maybe it might be a want that you thought about getting before, just pump the brakes. Don't even pay off debt yet, okay? If you're looking to buy a home, talk to your lender, okay? Let's do an evaluation on your current credit debt, installment debt, your buying power, loan types that you qualify for. Let's make a plan in order to utilize that tax return to its fullest. Whether it is paying down some of your credit card debt to boost a credit score, or paying off a small installment loan to increase your purchasing power, all right? Helping to cover your own closing costs, so if you do make an offer on a house, it's more attractive to the seller to take because you're not asking for closing costs. Putting it towards a down payment, buying down your interest rate. Let's play with the numbers to see what makes the most sense, instead of just, I got my tax refund, I'm going out and I'm buying, I don't know what the hell you're buying. You're buying something new, you're wasting it, you're shopping, whatever it is. Let's put a plan together if you are looking to jump into the market for a new house, because that tax return money can be a very, very powerful tool. And then the last thing, since tax season again is upon us, self-employed borrowers, just be strategic with your write-offs, right? No one likes to pay Uncle Sam, right? This sucks paying taxes. And when you're self-employed, you're just on the hook. It's just the way it is. But be smart about your write-offs. Don't simply put, well, I'm going to kind of increase my expenses, and you put it under either payroll for subcontractors, or you jack up the cost of repairs on a house, or whatever business that you're in. Increase in materials or supply costs were up. Those are hard expenses that you can't get the money back. I can't write that back in, okay? So be smart. If you have equipment, if you have property, utilize depreciation expense, which is simply a paper write-off. Utilize, if you do a lot of traveling, your mileage write-off. I can write 26 cents per mile back into your income and give you some of that back on your write-offs to help increase your taxable income for what we can use for qualifying, okay? So just be smart when you file those taxes if buying a home is in the near future. Again, I've talked about non-QM products. The reason I'm talking about being smart on your tax filing is so you can go a conventional realm, an FHA, USDA, something with better rates and terms. There's still other programs out there like the 1099, the bank statement programs and stuff like that, but they typically require higher down payment, a little bit higher costs. Your rates are typically higher, so it's just a better deal if we can go the other route and file our taxes properly. So I just want to remind you all of that and kind of just wrap up and just, bring those topics that we're not really thinking about because we always kind of dread tax season. Some of us do anyways. But before swiping your card out there for this Christmas or this holiday season, just, call your lender first. Let's make sure it makes sense. So I hope that information was helpful, guys. Remember, subscribe on YouTube. Check us out on Apple Podcasts, Spotify, and we'll catch you all next week. Merry Christmas and have a happy New Year.